This is a quick revision and taking your understanding of a subject. So just click on the link which I shared and please give me the results. I'm waiting for the responses. Just quick, please do it immediate fast. You have to only answer the first question. Okay, one person has responded. Please do it fast. Meantime, the students are switching from one place to other. We can just have a review or recap about what we learned. Any doubts? Please do it fast. There is a power cut at my place. So give me a 2 minute time to switch. Sir, please pause the recording. Is coming or going. It gives an idea about what is the progress, about how I'm dealing with my cash. Now there are two statements. One is the cash flow statement and second is the fund flow statement. To understand the basic difference between these two terms, the cash flow talks about only the expenses which are made in terms of cash, whereas the fund flow statement is more regarding talking about the changes, the reasons which are responsible for my cash position in or out. So cash is a very vital for everybody. It will help me in understanding the liquidity. It will help me understanding the financial regards of my organization, and it will be and positive. And so cash flow statement is an analysis where There is an error about the sharing, so I reshare. So the cash flow statement talks about how I'm getting the funds and what is the purpose I'm spending for it. So basically, is a summary of reasons and source and application of cash. Why we do the cash flow statement analysis? This analysis will give me insight about my liquidity because cash flow statement straightforward talk about the reasons how I'm managing my liquidity. It talks about how I'm managing my available resources in more effective and efficient way. So when I do the cash flow analysis, I can come to know how the money is coming in and how money is spent. Simply, the cash flow statement will help me to evaluate the effectivity to meet my immediate obligations. For example, short-term needs, working capital, or companies' petty cash, and so on. So liquidity and short-term obligations, I can do analysis, and that's nothing but a cash flow analysis. So in cash flow, how the cash is managed, how the cash is generated, and what are the sources of application of cash. This I'm going to study in a cash flow statement. The another most important reason for cash flow is every firm shows its opening cash balance and closing cash balance. But the entities who are either internal user of accounting data or external user of accounting data, they are not very clear about how the major source of cash is there. In fund flow statement, we can understand what are the reasons why I'm getting the funds. But the cash flow statement, if I make, that will particularly understand the application of cash, and hence I can analyze the major contents of this cash flow because in fund flow, we follow a logic of source and application and profit and loss. Whereas in cash flow statement, we are more giving importance that what are the reasons where application and receiving of cash is there. So after analysis of cash flow, I will come to know how the money is flowing and what is the purpose. So the major objectives of a cash flow statement is it helps me to highlight the cash and its related different activities. So if I'm thinking about some major activity where the liquidity is going to be at stake, so the cash flow statement will give an idea how I can manage that liquidity. It will give me a clarity about how to manage the short-term funds. The cash flow provides me information about the cash position, and in short, if I'm having any changes in my operating cycle or working capital cycle, how and when I need to arrange for the funds or how I should invest the excessive funds. These all feasibilities and possibilities are the objectives of cash flow statement. Now, what are limitation of cash flow statement? The cash flow statement is focused on position based on the incoming and outgoing of cash. So this is a just statement showing the factual position of a cash. It ignores the non-cash or near cash items. There are some assets which are not cash, but they can be easily converted into cash. but the cash flow statement ignores such items. Secondly, when the cash flow statement discloses the firm's cash position, it becomes a risky profile to disclose the capacity and stability of organization in general. The third, the cash flow statement is mere an indication of liquidity position, which ignores non-cash items. So it is only useful in limited approach. The cash flow statement, if I want to raise more limitations, there are two more limitations. Cash flow statement is not an alternate for any type of income statements. Similarly, the authenticity of cash flow statement remains challenged and limited till the source of data or information which we are accessing for cash flow statement. Now, what is difference between a cash flow statement and fund flow statement? Please go through the slide. I'll wait for 1 minute and then I will start explaining. Okay, let's start the basics. The cash flow statement is recording the transactions, only the items regards to the cash. It simply ignores non-cash items. Whereas the fund flow statement is works on accrual basis. Now, accrual basis means received or receivable, whichever is the first, I'm going to record it. So the fund flow statement is working on accrual basis. The cash flow statement is working on cash basis. It did not recognize, sorry, in cash flow, it did not recognize anything prepaid or anything outstanding. If the cash is going out, only the value of cash is important in cash flow statement. In case of fund flow statement, because it's an accrual basis, it is more important whether the cash is prepaid or the funds they are prepaid or they are outstanding. Suppose I have the salaries for 12 months from 1st April to 31st March, but the salary of February month is outstanding and I pay in the month of May. So for cash flow, the amount of salary is suppose 10,000 and yearly salary is 1,20,000. If 1 month salary is outstanding, for that regards, the cash flow will record 1,10,000. It will ignore the 10,000 if I'm not paying. But in fund flow, this 10,000 will be considered because as per the rules of fund flow, it works on accrual basis and as per these rules, income received or receivable as well as expenses paid or payable, whichever is the first, I need to record. So cash flow is oriented towards only the cash transactions and inflow of cash and outflow of cash. Whereas the fund flow statements is more importantly highlighting the accrual basis format where the reason, the purpose, and date is more important. The second difference is cash flow is useful for short-term obligations. Cash flow is more important to understand the short-term liquidity position. In long run, the cash flow has limitation because it is contains very complex items. Even though I prepared the cash flow for a longer period, it may possible that cash flow will have limitations about contents. So while doing the cash flow statement, I need to remember that the short side. is not being useful in long range. Whereas the fund flow statement is comparatively longer and more accurate because it covers paid or payable, receive or receivable. Similarly, the fund flow statement is normally prepared at the end of accounting period or a financial period. So overall, it is a summarization of movements of funds instead of only cash. The statement showing changes in working capital or statement showing changes in the profit and loss account is not essential for cash flow, but it is very crucial and essential for fund flow. Why? Because for cash flow, source and application is only how I receive the money and only how I pay the money. How and purpose is that's two things I'm recording cash flow. But when I'm working on fund flow, I always think about the changes in working capital, changes in income level, because for me, understanding the purpose as well as accounting logic and principle is more important. The cash flow is only related to cash and it ignores the concept or it ignores the point that more than cash, there are certain points which I need to take in the cognizance. In fund flow statement, it covers the all components of working capital, which is short-sighted in cash flow. So the cash flow, we can say that it is a part of fund flow statement, whereas fund flow is an extension of cash flow for long term, including cash and non-cash items. So if I want to just illustrate what is a cash flow statement, this is an exact diagram. Please go to the diagram. I'll wait for 1 minute, then I continue the discussion. So if you can see the debit side, normally cash flow is working on real account principles, debit what comes in and credit what goes out. So if I make a higher profits, I'll get a cash from it. If I sell an asset, I'm getting cash from it. If I sell my stocks, I get the money from debtors. If I introduce capital, if I take a loan, or if I don't pay to my creditors, ultimately what I'm getting is a cash. So whatever the purposes or reasons I'm getting the cash is my cash flow statement. Whereas where and for what purpose I'm paying the cash is application of my money. It it is called the out of cash. So I write in the credit side. For example, I repay the loan, I pay the premium, I pay for purchase of inventory, I paid drawings, I paid dividends, I paid loans, I paid money for certain taxes. For any reasons, when my money is going in, sorry, going out, it is a call as a outflow in cash flow statement. Now, this chart indicates how the outflow is classified. So let's talk operating activities. I'll just zoom it for your better reading. The first is operational activities. When the cash is more from income than expenses, then it's called operational cash inflow. For example, I'm a trader selling mangoes. So, what is the cost of mangoes? I'm not considering any cost in cash flow. But when I'm selling more and the expenses for so that cash flow is less. So, in that regards, the cash flow indicates more income. The other cash flow reason is investment activities. If I have some investments, it can be in property, equipment, equity, mutual fund, and so on. The income is generated by this cash, and that is my inflow. Here, I'm not interested whether it's a business or non business, it's a personal or commercial. If money comes to the company, it's called investment activities. The next is the financial activities. In financial activities, I will get some loyalty, I'll get some debentures, I'll get some interest, or some gift or contribution in capital. So, what are the top three? That is operational activity, investment activity, and finance activity. If I'm receiving the money, it is regarded as inflow of cash. And similarly, if on these three activities I'm spending, it is called as a outflow of activity. Now, what is operating activity? What is investment activity? And what is a finance activity? The operating activity is my regular business, which I'm doing. Suppose I'm a car driver. So whatever the rent, whatever the charges I receive for using my car, it is a call as a operating activity. If I am a cloth merchant, then while selling and purchasing the cloth, if I receive any money, it is called as a operating activity. Whereas, suppose I'm a car driver, I invest 10,000 in mutual fund, and on that investment of mutual fund, if I generate some return, then in that case, the returns I generate is called as an investment activity. Whereas, if I take the loan for my any purpose, then taking external finance or providing repayment of external finance is called finance activity. So in cash flow, I have three types of activity. One is operational, second investment, and third is financial activity. Operational activities are talking about funds applied or received while doing the regular business activity. Investment activity talks about the funds paid or received via different investment instruments. And in the last, the finance activity, it talks about how the money is used or applied towards long-term financial sources. So operational activities are business activities. Investment activities are parallel business activities. And financing activities are sponsorships received or given. Please read this slide. I'll wait for 1 minute. Let's move further. So we already discussed this. So I just skip this part. Now this comes a format of cash flow. The first thing what I'll do is a net profit. So it is the profit available from my final accounts. Then I will add all the reasons which are responsible for my cash in, and then I deduct all the reasons for which I am paying the cash. Now please remember, in cash flow statement, the depreciation is not considered as expenses because in cash flow statement, the depreciation is considered as mere changing my pockets. As per cash flow statement, when I pay or receive something, it directly indicates that I'm just recording my transactions and it is not actually being paid or received anything. So the cash flow statements do not consider depreciation as an expenditure. So while calculating the cash flow statement, I need to remember I have to add depreciation again. The other thing is if there is any surplus items or any payments, even though that payments or surplus items are being considered based on receipt or payments. Now, I'll just switch my device so that I can illustrate more better about calculation of cash flow. If suppose in between the power cuts off, we again continue with the mobile. So, how the calculation of cash flow is done from activities? There are two methods of preparation of cash flow. One is called as direct method and second is called as indirect method. So in direct method, we calculate the cash flow based on the income which is realized by means of cash. So we follow the format that is cash sale and credit sale, add opening or debtors balance, less closing balance. So we get a cash and step two, we find out the cash paid and received from suppliers. So in direct method, we find the income and the expenses are deducted, and whatever the income and expenses, it is based on my sales. So in this method, my importance is given on my sale and cash paid to my suppliers or employees. So if I broadly said here, you'll find out the if you remember the cash budget which were done in the first semester, similar type of workings we are doing. We have cash sales, then we have credit sales. Now credit sales which are realized are added here. For example, the credit sales are 100 and my opening debtors are there. So opening debtors minus closing debtors, I can find out how many people have paid money to me. For example, in case the opening debtors are 100 and closing debtors are 50. What it means, the difference between 100 and 50 indicates I have received the 50 rupees from my debtors and till the 50 are unpaid. Similarly, the bill receivable means the promissory note which is received by me from my debtors. So the value of promissory notes opening value, suppose it is 200 and closing value is 100. So it means out of the total promissory notes, this is the opening and this is the closing. So means I have the earlier promissory notes, that is bills receivable were 200 rupees. Now it is 100 rupees. Now when the amount declines when they are being encashed or paid. So in calculation of working capital, I'll mention the credit sale. I will add opening balance and I'll deduct closing balance. And this way, the first block will indicate the funds which I have generated from sale. The second block is actually the operational and the calculation based on my trading activity. Where what I'll do is I'll first write down cost of goods sold, add the closing stock, less opening stock. Now, why the closing stock and opening stock? Because if I adjust closing and opening stock, I can calculate how the funds are and how much the inventory is used. So this formula is done to calculate my purchase and production expenses. The first block is about my income generation. Second block is about my consumption, and income minus consumption. I'm getting a cash flow. It can be negative, it can be a positive. So these are the two illustrations about cash flow statement. I'm waiting 1 minute. Please read the format. We are going to solve the virtual illustration for this scene, so don't worry about it. So let's take an example. Sorry, I missed the third part. After deducting this, which I shown, we have income block minus expense block, and when I do the income minus expense, I get the cash. So let's take a numerical. I think I got only 2 minutes left. No, I have time. Sorry. So we can take the numerical. The from the following information available in the books of X, we need to calculate the. I'll just zoom it for your reading purpose. I hope it's visible. Yeah. So from the given information, we need to find out the cash from operating activities of Mr. X. So what they're given, the sale of goods is 18,000. The cost of goods sold is 12,200. The gross margin, now here margin means a profit available. So sometimes in cash flow, you can find a parallel words for your profitability. So the gross margin is 12,200. You have sundry debtors expenses 2,000, salaries 1,000, depreciation 500. Now, initially, when we always do the calculation of any income expenditure, we consider depreciation as expenses. So even this in numerical, we can see the depreciation is shown as expenditure. Then we have the net profit, that is net margin, 2,300. Please go through the numerical. Now let's move for the solution part. So this is a balance sheet given to us. One balance sheet is given for first year, that is 2011, and second balance sheet is given for the 2012. So we are given the information about sales, and we are received the information about 2 years balance sheet. Now let's move on for the further information. So what are the steps we need to follow for solving a cash flow statement? We already discussed that cash flow statement is indicating, we already discussed the cash flow statement is an indicator of the purpose for which the cash is coming in or the cash is going out. Now here, let's talk about the first application of cash. The bills payable was 500 rupees in first year last year, and now it is 200 rupees. So we got an opening balance of 500 and the closing balance is 200. It means I have issued the promissory note to pay the my suppliers, and it was earlier 500 and end of financial year it is 200. So it means I have paid the 300 rupees to my suppliers. Then I talk about creditors. The creditors opening balance was 1000 and the closing balance is 1200. So it means I earlier paying 1000, now I postponed and paying only 1200. So when I minus this, that is A minus B, what I find that I'm holding 200 rupees as outstanding payment for my creditors. If I go to the similar part to my salaries opening balance is 1000 and closing is 800. It means last year opening was 1000, whereas current year it is 800. So I have paid total 200 as salary. The stock in trade was 1000 and now it is 800. So stock in trade can be any particular, it can be finished goods or raw material. So even I want to sell or purchase, it is again A minus B. Answer is 200. So I consider this as my expenditures. Now let's move for my incomes. The bill receivable, they were earlier 2000 rupees and now they are 1500 rupees. It means 2000 was outstanding and now only 1500 is outstanding. So it indicates the 500 rupees is received to me. The debtors earlier was 1000 and now they are 1500. So if the amount of debtor is changing, it simply indicates the people are not paying me. They are holding for more credit period. So in short, I have negative 500 income. Why negative income? Because this income is still locked, still pending with debtors. Instead of paying me in time, they have delayed, and that's why the more amount is in closing balance. Please go through the current asset and current liability. If any doubt, you can unmute or you can post in chat box. I'll discuss this again. Don't worry. So the first thing I'm doing is I'm finding out what is my income side and what is my payment side. So in cash flow, the first step I'm doing is finding how the cash is received, and second thing I'm doing how the cash is paid. So bill receivable and debtors, these are the two people or two source for cash. So I mark these two source in green, whereas bills payable, salaries and inventory, this is the application which I mark in red. If the previous year, in case of income, the previous year balance is more and current year balance is less, then we can say that I received the income. And iska ulta, the previous year balance is low and this year balance is high, it means my income is outstanding. So accordingly, I mark the plus and minus signs to the numbers. I suggest go through the contents again. Now let's move for the further step. Because I'm solving this numerical virtually, I have limitation to show the everything's together. So what I'll first do, I'll find out the cash received. So my customers give me cash 18,000. I paid to my employees 15,300 and the cash available is 2,700. So this is a direct method. Simple. This block is your cash flow statement. So let's understand the first block, that is receipt of cash. I have during the year the sale was 18,000. The debtors in the start was 1,000. The bill receivable 2,000 and the closing balance was 3,000. So instead of adjusting single entry, here I adjusted the combined effects. So 18,000 plus 3,000, my total expenses are 21,000. Whereas the adjustment, if I do about the closing balance, it is costing me total 3,000. So I have received total 18,000 from my customers. Accidentally in this numerical, the opening balance and closing balance they are matching. But suppose the opening balance is of 2,000 and closing balance is 1,000, it means the 20,000 minus 1,000, it is giving me 19,000. So my cash receipt from customers will be 19,000. So this amount is indicated as cash receipts. Now we have to find out this amount 15,300. So we have done the step one to find out the cash from customers. I'll wait for 2 minutes. Please read the slide. So any doubt in this first step where I calculate the cash from customers? You can unmute or I just repeat it again. Let me clear these drawings. I have the information that the sale is 18,000. The expenses which I made about sale, because we have the formula sales minus cash paid to suppliers, employees, whatever the balance remains is my cash flow. So how I do it? The cash sales, credit sales, add opening balances of debtors and bill receivable, and less closing balance of debtors and bill receivable. So what I done in the given numericals, the opening balance of debtors and bill receivable are 3,000 and closing balance is again 3,000. So the cash from sale remains 18,000. What are the things apart from this we have to talk about as financial activity? And what are the things here we have to talk about operating activities? So now let's focus on financial activities. So there are two methods to find out this. I can differentiate between opening and closing directly, or I can just mention the all opening balances together. I can just take total of my all closing balance together. And I need to adjust this to understand cash paid or received from suppliers and employees. If suppose this is a negative balance, that means I am a short side and I again buy less payments. But if the balance is positive, it means I have higher expenditures and I need to adjust this expenditure from sales figure. Please go through this slide. I'll wait for 1 minute. Now let's move on further. So I have expenses of 15,300. So what I done, 18,000 my income less 15,300. So my cash available is 2,700. Let me again explain this direct method. In direct method, we have only two options. One, income from sales and less the expenses made for suppliers and employees. Hope I'm clear about this formula. Any doubt in this formula? I'll wait. Please reply in chat box if any doubt. I'll wait for a few seconds. Okay. So in this method, I need to find out the income from sales by a formula which is called block one. And then I have to find out expenses made to suppliers and employees in block two. So please remember there are two blocks. So in the first block, we find I had to take the total of cash sales and credit sales, add opening balances and less closing, then whatever I get is called cash from sale, and this is value of first block. So what I'm doing, opening is 1000, closing is 500, then the cash generation will be 500. Now there is a curious question that if the sale is 1000 and opening and closing balance, if I adjust, it becomes 2000. So 1000 minus 2000, then what is my cash realization? So in that case, when the negative balance is there, I can claim I have made a loss and I have not realized any cash. Rather, I applied the available cash to my resources. In second block, we are going to adjust the cash or amount paid to suppliers. A simple formula, whatever the opening balance is, I'll take the total, and whatever the closing balance, I'll make a total. So the total of A minus total of B is equal to the cash paid to my suppliers. So in this numerical, I have a sale of 18,000. Cost of goods sold is 12,200, and they are given the gross profit and so on. So what is my interest? My interest is, what is my sale? 18,000. Now I need to find out bills receivable and debtors. So bill receivable and debtors opening stock is 2000 plus 1000, it is 3000. Whereas its closing stock is 1500 and 1500, so 3000. So this will nullify the 3000 as in total, and my final answer will be 18,000 as cash from sales. And then for calculating the other block, what I will do is I'll take the total of opening balance, and then from this I'm going to deduct all the closing balances and find out the expenses which I have made. So here is the illustration. This is a block one I done, and 18,000 is there. Opening balance are 3,000, closing balance are 3,000. So they match together, and my cash from customers is 18,000. I work for the second. The cost of goods sold are 12,200. The salary and other expenses are 3,000. Now, in this, I will add my all opening balances and reduce all my closing balance. So after adjusting the numbers, I'm getting the cash paid to my suppliers and employees is 15,300. So this is my second block. And you can see in total, my cash from suppliers is 18,000, which I calculate in block one, and expenses, which I calculated in block two, they are 15,300. It means by way of trading activity, I get 18,000, whereas I paid 15,300 for its expenses. And this is called the direct method, where my cash balance is 2,700. So I hope the direct method is clear to all of you. If any doubt, please jot down the doubts. We'll clear this doubt in next session. We have one more method for cash flow, that is called indirect method. So in indirect method, the change in each item where we are following the accounting method. For your syllabus or university examination, we always follow the indirect method. So that's all for today. Thank you for joining the session. Unfortunately, our poll was pending. So what I'll do is I'll just show the poll and we can close this meeting. In case, I'll just show the results. So 8 people are correct out of total 10 who answer that financial restructuring is recognition of financial debt. And the second, financial distress is financial difficulty, distress. So many people not yet understood what is a financial distress. So in detail, I'll share these results in next session. Now it's time for the third session. You can log out and join the third session. Wish you a wonderful day ahead. Enjoy the monsoon. Take care and be cautious about your movements. Thank you. Now you can log out.